If your payroll company makes a mistake, who actually pays the payroll tax penalty? It's a nightmare scenario, right? Many owners assume that if payroll taxes aren't filed correctly, the responsibility falls on the payroll software or service provider. Unfortunately, that's almost never the case. Payroll taxes are considered trust fund taxes, so if mistakes happen, they trigger penalties, interest, and IRS notices that can snowball quickly. Assuming you're protected simply because you outsource payroll is one of the most expensive assumptions a business owner can make. Here's the short answer. In most cases, the business owner is liable. It doesn't matter which payroll software you use, and it doesn't matter if a third-party provider made the mistake. From the IRS's perspective, you are the employer, and that means you're ultimately responsible for making sure payroll taxes are withheld, filed, and paid correctly. Outsourcing payroll does not outsource responsibility. The reason comes down to how payroll taxes work. Payroll taxes are withheld from your employees' paychecks on their behalf, and the IRS views your business as a trustee of those funds. When those taxes aren't remitted properly, it's treated very seriously. In some situations, it can even trigger the trust fund recovery penalty, which may expose business owners to personal liability for the taxes and penalties in addition to the business entity's responsibility. In most cases, payroll tax problems aren't caused by bad intent, but by mistakes or lack of oversight. So here's the most common scenarios that we've seen. Payroll software may withhold taxes from employee paychecks, but fail to actually remit those taxes to the tax authority. We've seen multiple examples of Ohio local taxes being withheld without being remitted by a national payroll provider. Incorrect setup by the business owner for the state or local payroll taxes, especially when hiring remote or out-of-state employees, and missed filings during a transition period from one payroll provider to another. Many owners assume if they haven't received a notice, then everything must be fine. But payroll systems only execute what they're told, and they don't verify outcomes. Oversight still falls on the owner. The good news is that payroll tax risk can be reduced with simple oversight. Verify that payroll tax payments are actually clearing your bank account to offset the tax liability on your balance sheet. Open and review every tax notice immediately. Some notices may be more information without cause for alarm, but it's important to take any action on important requests or errors notices quickly. And make sure payroll activity reconciles between the payroll reporting, the bank account, and your bookkeeping reporting. Payroll tax liability almost always falls on the business. If you're not confident your payroll is set up or monitored correctly, don't wait for a notice to find out. Talk to a financial professional. Looking for more small business finance tips? Subscribe to our channel today.